My name is Pradeep Paunrana. I'm the Managing Director and CEO of a company based in Kenya, a listed company on the Nairobi Stock Exchange. Our business is manufacturing of cement. The company is called ARM Cement. As a quick introduction, my father founded the cement company. In the last 10 years, we have grown the company to a market cap of $500 million. If you had invested in our company 10 years ago, I think you'd have got a 44 times return in that last 10 years. And the pace of growth is continuing. I studied at New York. I did my MBA at NYU Stern nearly 30 years ago, and I'm happy to be back here in New York. A lot of our institutional investors are based out of New York and London, increasingly from Singapore and Johannesburg, and other cities out of the United States as well. Kenya is in a unique position for growth, as is the rest of East Africa, of which Kenya is the biggest economy. Just to give you a background on the infrastructure developments and how this translates into growing demand for cement is what I'd like to spend a few minutes talking about. Cement consumption in East Africa as a whole at the moment is about 80 kilograms per person per year, 80 kg per capita. Now this compares to Egypt, for example, which is 550 kilograms per person per year, or South Africa, which is about 300 kilograms per person per year. If we take Mauritius, with a population of 1.2 million, Mauritius consumes 1 million tons of cement a year, and Kenya is just about 5 million tons, Tanzania 4 million tons, Uganda about 3 million tons. Altogether, the whole of East Africa, 120 million population, the cement consumption is just about 10 million tons. For the last 10 years, and this is the reason our company has been growing as rapidly and with the market cap as I described. For the last 10 years, the growth in the East African market, cement consumption has been at about 14% year on year. At this pace, cement consumption in the country, in the region, doubles every 6 or 7 years. Why is it growing so quickly? Historically, there's a very strong correlation in emerging market economies between the GDP growth rate and cement consumption. Cement consumption is generally 2.2 times that of the underlying GDP growth rate. And our economies have been growing at about 6% in spurts, about 7% sometime. And if you look at the region and you divide that into the countries, Tanzania is growing at a much larger, faster pace than Kenya. Kenya is about 5%, and Tanzania is about 7%. But the story going forward is even more exciting. Tanzania has discovered gas. It's already in production, and that is transforming the country's economy. Tanzania was already rich in mining industry, gold and diamonds. Going forward into the next few years, there's platinum, and there's nickel, and a few other minerals, including uranium, that are going to be in stream. Now that is important not only for cement consumption, but another subsidiary product that we manufacture, which is lime, which uses exactly the same raw material, limestone, and the lime is used extensively in the mining industry. Tanzania has coal, and in the next 10 years, going to be self-sufficient in its energy requirements. This means the capital formation in the country that is available to the government is huge. New ports are being built. In Tanzania, new roads. In Kenya, the plan is much, much more ahead. Tullow Oil, you've probably heard, has discovered oil and is in the process of implementing a plan to extract the oil and export the oil out of the port of Lamu. Tullow Oil also has reserves and has just finalized the setting up of an oil refinery in Uganda. So both Uganda and Kenya have oil. In the next 5 years, by 2018, I think East Africa, and particularly Kenya, the largest, would be as big an oil exporter as Nigeria, 2 million barrels per day of oil. And we're looking at cash on stream from 2018-2019. Kenya has already embarked on a huge expansion program. We built 10,000 kilometers of roads in the first 50 years after independence in 1963. The government has just embarked on the build-up of another 10,000 kilometers of road in the next 4 years. There's $5 billion to $7 billion of construction. We have already started constructing a new broad gauge railway. This is another $5 billion project. A new port is being built. New oil pipelines are being built. Now, this all translates into huge requirement for cement in the infrastructure build-up. I'd like to talk about a little bit about our company now. We have 2.5 million ton capacity that we've built over the last 10 years using our own clinker. We've just commissioned our latest plant in northern Tanzania. It's a 1.2 million ton per day clinker plant. This is the single largest clinker line production south of Nigeria, largest in eastern southern Africa. We are building our cement plants at roughly $100 per ton of annual capacity, whereas most of our competitors in the market is building this at about $180 to $200 per ton. With a little bit of gearing up, our investors are seeing a huge return. $30, for every $30 of equity, we're creating assets worth $300 million. And this is what is translating into our share price and our market capitalization. We've built a huge capacity with our own limestone reserves in going forward for expansion, not only in Tanzania, but also in Kenya. We're now looking at putting up a new 2.5 million ton cement plant over the next 5 years. In terms of the regional expansion, and we've diversified our operations regionally, Tanzania, Kenya, and Rwanda. We are also looking going forward into Ethiopia, which is also rapidly growing, and other countries in the region. To conclude, Kenya is particularly at a moment where we have a huge explosion in our economy. The economy is ready to take off. We've had our challenges in the past. We've got a new constitution, which I believe is going to be a model and a blueprint for most African countries. We have a devolved system of government. The counties in the country have a share of the national revenue, which is being used to develop the counties at the county level, at the rural level, taking pressure away from urbanization, creating many new potential metros and metropolitan areas in the next 15 or 20 years. It's an exciting place to be, and our capital markets are becoming mature. From my own company point of view, we have raised instruments on the Nairobi Stock Exchange, listed bonds, equity-linked notes, convertible notes. We're looking for capital for the expansion as we go on. Every 5 years, we have our own investment plans, and we have a very dynamic exchange as well. So look forward to engaging with more of you on a one-to-one basis, and please do ask any questions when you have.
Thank you, Pradeep.
Doing business in Africa, you can't afford to be without Africa Investor.